Hello, everybody. Welcome back to another episode of the Market Close. We are back in the studio, real bricks and everything, here Monday, September 16th, 3:46 p.m. It's been a very exciting day in the global capital equity markets. Why has it been exciting? Well, because our good old friend Palantir, although we're not there for a good second or for like a good, honestly, 20 minutes, we were trying to hit that elusive 37, 36.92. I feel greedy. I feel very greedy because there is no reason I should be like, hey guys, we can almost hit 37 today. Like, there's no reason I should be like, oh my God, we almost might hit 37. It's just, it's absurd that I'm like, oh wow, we're only 20,000 shares away from 37. It was cute when it was $19.99 trying to go to 20. It was cute when it was $24.99 trying to go to 25. And it was really special when it was $29.99 literally for an hour on this very stream trying to get to 30. Now it's just fucking ridiculous, bro. Now it's just like, all right, $35.99, let's get to 36. And then $36.99, let's see if we can get to 37. But hey, the market is the market, and the market's giving us some of these opportunities. So we got a lot to dive into. We're going to talk about Palantir. Unfortunately, I don't think we're going to hit that $37 mark unless in the next 13 minutes we have a massive reversal. But the fact that we're even holding the mid 36s, again, there's no need to be greedy here. Up 2.2% is incredible. Now at an $81 billion market cap. I'll talk about the valuation a little bit as well. Some people, I asked on Twitter the question, hey, how do you justify the valuation? And, you know, although some people said you can't, there were some people that actually had some decent arguments for how you could expect Palantir to grow into this valuation. On top of that, you got Robinhood that broke out today, 22.54, now at 22.31. Have some updates on Robinhood as well. Look, I think they have a shot to hit 25, but the only way they really get to that 25 target I have end of year is based on how the Fed does the interest rate cutting cycle, 25 or 50 on Wednesday, and more importantly, how the market interprets that. So we're going to see what happens. The most important thing today, though, is not Palantir. It's not Robinhood. It's the S&P 500 right now on your screen that is green. Now, the reason the S&P 500 being green is so important to me is because two of the biggest contributors to the S&P 500 are really red. You got Apple that's down almost 3% today, and then you got Nvidia that's down 2% today. Both of them at one point were down 4% on the day. Somehow, I think we're seeing a bit more of a broadening of the rally, given the market doesn't care that much that Apple and Nvidia are down, since they're willing to buy the broader index. We got the NASDAQ right here as well. Obviously, the NASDAQ's taking a little bit of a dump, down 0.5%. Why? Because Apple and Nvidia are big parts of the NASDAQ as well, more tech focused, and that's why they're down. If we look at the Max 7 right here, you've got Microsoft and Meta, Google that are up. Meta doing the best today, up 1.64. Microsoft up a little bit, Google up a little bit. Amazon down about 1%. Nvidia again down 2%. Tesla as well, not really doing that well today, although it was down about 3%. Now it's down 1.44%. We've got 1010 coming up in a bit. So it'll be exciting to see what happens to Tesla going into that event. And then Apple down 2.68% on the day. Now, as I'm Beneficial says right here in the chat, it is still September. So I am not only treading cautiously, I am treading lightly, in the words of Walter White. I don't know what's going to happen, dude, because September is September. This is supposed to be today, like starting September 16th till the end of the year. It's supposed to be the worst time of the year for the market. So September is the worst time. And then inside of September, the last 2 weeks are the worst time. Maybe this is a little bit of a head fake we're having today. I'm kind of thinking, you know, you got a bunch of different conflicting pieces of news coming out. The market's kind of just like buying to buy, but there's no real stable reason why they're buying. And especially with Nvidia and Apple down, it's like it's not kind of an everything rally, everyone contributing. So I guess we'll see what happens after the Fed cuts rates on Wednesday and how the market's going to interpret it. You guys heard that? I think that's like a fire truck outside or something. IWM is at 217 right now. So small caps as well are green on the day, which is not bad. And then Oracle. Larry Ellison has added $8.7 billion to his net worth today. Right here. Here you go. He is now the second richest person in the world. We have not even talked about Larry Ellison. Hold on. Give me a second. What's going on outside? All right, guys, you got to give me a second because someone's at the house and they have a police siren near them. So I got to go. I'm going to leave the stream open, but yeah, feel free to say, feel free to not. I got to see what happens downstairs. So I'll be back in a little bit. I don't know what's going on. I'll be back. If anyone comes in the stream, just let them know what's happening. Dude, what is going on with my life, bro? This is like, this guy is okay. So basically, my dad has an old Honda Odyssey. I wasn't swatted. No, I wasn't swatted. My dad has an old Honda Odyssey, and he bought a new car. And the Honda Odyssey, it's like from 2008. It's been sitting in the not even on the driveway, on the sideway of our neighborhood for like 2 months now. I'm not gonna lie, it's been there for 2 months. So the cops like, why is this car still here? And I'm like, because my dad's busy and like we haven't moved it yet. And he was like, well, you got to move it by tonight. I was like, can we do it by tomorrow? He's like, by tonight. I'm like, all right, bro, by tonight. So yeah, that is what's happening. Dude, I thought it was something serious, bro. I thought it was like, what the fuck? He's like calling me from upstairs. Like, what the fuck's going on? I got sent to the principal's office, dude. Goodness gracious, bro. He was like, yo, as soon as I walked outside, he was like, so just to let you know, my body camera's recording. I'm like, are you about to pull a gun on me or something? Like, you're recording this? Like, what the hell's going on? But anyway, yeah, we're good. I guess we got to get rid of that car pretty soon. Now, in fairness to my dad, he did ask me last week to try to, call a company to get rid of it. But I was traveling, so it was like very hard to navigate all that stuff. So we'll do that. Lame story. See, I wish it was something better. But it was a lame story. Anyway, sorry for that. We are back here. What I was saying was IWM catching a little bit of a bid, going up to up 0.5% right now. Palantir right here at 36.48, up 2.5% as the bell closes. And S&P 500 here at 563. S&P 500 is basically 0.5% or 1% away from all-time highs. And so I think closing above 565.5 is going to be very important, hopefully after that September rate cut. But the question still is looming, what is that rate cut going to be? And is that rate cut going to be interpreted as bullish for the broader market? You should have been like, I'm live streaming you, bitch. Yeah, well, you can't say that to a guy who has a gun because unfortunately that doesn't work out too right. He was just so serious about it. I'm just like, all right, dude, like, is it really that serious? Like, is it that big of a deal? Like, what if I was in like a really important meeting, dude? Like, what if I was like fucking closing a multi-million-dollar deal or some shit and I have to leave the deal to fucking tell him, yeah, the car will be gone. Like, that's the only, look, I respect policemen so much, but I would hate being one because sometimes you just have to like annoy people with their day. And it's his job, right? Like, I'm not blaming. At the end of the day, that is his job. He had to do what he had to do. But it's just one of those things that kind of sucks, right? Because it's annoying at the end of the day for people. Regardless, at least, it wasn't anything more serious than that. Jersey cops are always serious, dude. I was on the left-hand side of the lane one time on the highway. I didn't know you weren't allowed to be on the left-hand side of the lane and you can like only be on the right or the middle. And the cop pulled me over, gave me a ticket. And then he just like went away. 2 seconds later, as soon as I start going up, he pulls someone else over. Like, I swear he had a quota that day and he was just handing out the tickets. I'm like, all right, buddy, I guess this is what you have to do. But there you go. So let's take a look at what we're going to have with the Fed. Let's listen to a little bit about this. Here is one argument in the context of being a little bit confused, bearish or bullish, based on what we're going to have with the rate cuts, particularly because until we have earnings acceleration, maybe the market doesn't really care about the rate cut until we see Q4 guidance. Let's take a look at this and then we'll get into the market close.
Growing confidence in that favored soft landing scenario justified, and just how big are the Fed stakes for the fate of the bull market? Let's ask Adam Parker, Trivariate Research founder and a CNBC contributor. So Adam, market trying to look through maybe some of the signs of weakness in the consumer last week. We've rebuilt toward those record highs. Valuation.
Okay, hold on. That comment has me dead. I should have said, sir, did you buy Palantir? Imagine, dude, he was like yelling aggressively. I should have left the mic on. You guys might have heard it from outside. I should have been like, sir, but did you buy Palantir yet? Dude, that would have been hilarious, bro. But it's good. I don't think I would have the balls to ask that, but it would have been funny if I did.
More or less toward the highs. 12-month forward earnings forecasts continue to rise. I guess you could see that as a reassuring sign or a source of potential risk. So how are you reading it all?
I think it's pretty inconsistent. I feel a little bit more tortured than any time in the last couple of years because you can't have an economy that requires the Fed to cut rates several times. What right now, 8 cuts are implied in the next 12 months, 8.5. You can't need that and then also not have any impact on U.S. corporate earnings. So the bottom-up numbers, as you point out, the 2025 numbers are a tiny bit higher today than they were on January 1st.
Yeah.
Right? Yet I know things are slowing in the U.S. consumer. I know they have less pricing power. I know the earnings estimates hockey stick more than the normal hockey stick that's in there. So that's the tension I see is I need to believe that this is going to end soon, the weakness I'm seeing. And I think the risk really starts on October earnings season, the guidance for the January, the Q4, the January season. So I think it's the kind of maybe.
Which is fair. We have a crappy guidance for Q4. Things are going to get rough. If we have a decent guidance, I think that's where the bull market continues.
You sell the news, on the Fed stuff a little bit until I get that next sort of round of confidence that it really is going to be accelerating in 2025.
I guess the devil's advocate response to that would be just because the Fed funds futures market is positioned for 2 percentage points of cuts. It first of all doesn't mean that the economy absolutely needs them. It could also mean we have Fed funds above 5.25 and inflation's 2.5. Right?
Yeah.
So you have this spread. So you have room to do it. And of course, it's also kind of there's always a what if element in there, right? Like it's not like we know it's going to happen, but we're leaning in that direction. I guess the point is,
right,
given that a lot of companies, for all that we've talked about overall earnings growth being great in the last year or so,
right,
it's been narrow. A lot of companies are kind of flattish in terms of total profitability over the last couple of years. And are they just getting some relief?
Generally, look, I make 2 comments. One, I really look carefully at the relationship between Fed fund futures, so what people think the Fed funds rate is going to be 12 and 24 months from now, and how it relates to the valuation, the price of forward earnings of stocks. That was very negatively associated in 21 and 2022. We got worried about higher rates, multiples get killed. Then it didn't matter. Beginning of 2023, people said, we're toward the end of the hiking cycle,
right,
all's well. Now we're a little bit in this weird situation where the correlation between lower rates and lower multiples looks positive. It's actually reversed some. So I think when I measure what people think 2 years from now, if it gets too negative, then I think it's bad. So I think we're in this weird kind of top of the saddle. So that's my first point on the multiples. In terms of corporate earnings, look, you're right. I mean, the biggest equities, the big 6, actually even the biggest 20 companies have been growing their net income dollars faster than the rest.
Yeah.
So for you to really believe in that breadth, what you're really saying is the economy is going to trough sometime in the middle of next year. You want to be, usually equities are 3 months anticipatory. Let's say you're anticipating the other people, so you're 6 months early. It still feels to me 3 to 6 months too early to really bet on a earnings-related acceleration.
And look, I think that's fair. It's just if we do have an earnings acceleration before those 3 to 6 months happens, which so he's expecting by Q2 of 2025, meaning it happens in Q4 2024, I think the market's going to like it, along with if the rate cutting cycle is viewed positively. We got a lot more to talk about rates and a lot of other headlines today. 4 p.m. September 16th. Thank you, everybody, for being here. Stock market is now closed. All right, so here's how we ended up today on Monday for September 16th. 36.32 on Pounder, up 2.05% of the day. I really wanted 37. Again, I was being very greedy. We didn't get 37. That's okay. But we did get 36.32 right here. So not bad, up 2% on the day. S&P 500, 562.9, not red, which is incredible given Apple and Nvidia were down today. So S&P ends up green, meaning we saw probably a little bit of rotation. Was Berkshire up today? Berkshire was green on the day by about 1%. So not bad. That also helped the S&P because Berkshire is in the S&P 500. Robinhood ends the day up about 0.5%, 22.21, which is not bad. At one point it was 22.54, now 22.21 in the close. And Bitcoin actually went the opposite. Bitcoin went down 1.1% on the day. So again, the market kind of betting on Robinhood from a perspective of, hey, we just think the core business is going to do well. Crypto doesn't need to do well just for Robinhood to do well. Oracle ends the day up 5%. Larry Ellison adding $8.7 billion to his net worth. We really don't talk about him as one of the more rich people in society. I think a lot of people forgot like he's up there. And I even mentioned last week, I was like, dude, this guy's worth like 140 billion or something, 150 billion. I had no idea he was worth that much. And now he's worth a lot more than that simply because of Oracle stock going up. He owns 40% of Oracle. So talk about someone not giving up their shares and not giving up their control. Larry Ellison has kind of headed straight to that philosophy with Oracle. Apple down 2.7% on the day. Nvidia down 1.95% on the day. Intel is up 5% after hours. What's happening with Intel? This is after hours. This isn't even in the main day. It was up 6% on the day. Now it's up after hours 5%. What did they say? They must have said something. Intel and AWS expand strategic collaboration, helping advance US-based chip manufacturing. So Intel got the $3.5 billion deal to make chips for the US military on September 13th. Now they're press releasing a AWS strategic partnership. Stock's up 6% just because they're collaborating with AWS. Really? Is that enough? Is that enough to get the stock to go up? Let's see the press release. That is kind of weird. It seems like the market's buying up any good news that they can buy. No press release on their website. Let's see if Amazon has the press release on their website. No press release on Amazon. So that means the terminal must have got it. I guess, look, I mean, we talked a lot this morning about why America needs to invest in chip manufacturing in case Taiwan is invaded. I'm assuming this is not a government deal, but I would imagine Intel and Amazon making strides together definitely is progress, which is good, especially for a stock trading under tangible book value. Any piece of good news is probably something the street is going to buy up. Let me see if I can get any other news or any other updates on this. Yeah, it's literally just okay, I got it. So a little bit more. So Intel, as a part of expanded collaboration, Intel will produce an AI fabric chip for AWS on Intel 18A. This is a co-investment in custom chips design under a multi-year, multi-billion-dollar framework. Interesting. I wonder if that means Amazon's putting billions of dollars into Intel, and that's why the stock is running up about 7% right now. Potentially, that could be the reason. Potentially, that could be the reason. Let me know in the chat if you own Intel. Let me know if you actually own Intel in the chat, or if you bought it on this 40-50% decline this year. I think it bottomed at, what did it bottom at? It bottomed year to date at let's see, 1851. 1851 was the bottom this year. Right now it's at 2250. Up, wow, up almost 8%. Okay, market likes it. Wow, yep, past 8%, up 8.3%. Market likes this deal. So there you go. Intel, where's Amazon? Is Amazon getting any love on this? Amazon is flat because Amazon is worth $2 trillion and Intel is worth like 80 billion. Arun bought at 19. A couple other you bought at 19 to 20. All right, so some people bought some more. John, Amit, could you start covering Oracle? Partnered with Palantir at 118, now at 170. Yeah, look, Oracle's not going up because they partner with Palantir. Oracle is just helping Palantir with their go-to-market and their sales distribution. Like, Palantir is not the reason for why Oracle's going up. Oracle's going up because they raised guidance and they said that their data center demand for cloud computing and their AI infrastructure products, particularly for governments and hyperscalers, is massively scaling, right? So that's why that's going up. Oracle's always been a very interesting company. It's been a little bit ignored for the past couple of years, but I think Larry Ellison, by the way, the guy's 80 years old. If you see him talk on camera, he looks like he's not a day older than 50. I mean, the guy's just in the right shape and he's talking coherently. He knows what he's talking about. He knows what he's painting in terms of visualization of the next 10 years. So, yeah, I think Oracle is going to be a big winner. The problem right now, though, buying it at these levels, and this is the same with every stock in the market, same thing with Palantir. Okay, so let me ask this question to the chat. What stock is legitimately undervalued right now? Not on a 10-year horizon, but on, let's say, a 12-month horizon. What stock is actually what you can definitively say, hey, this is undervalued? Because, I mean, the market's up a lot, folks. It's hard to sort of find a stock that's like deeply, deeply undervalued. So when it comes to buying Oracle, I mean, I would not be a buyer at 170. A lot of the growth is baked into it. And so they've got to execute on the growth, which I think they will. But so far, it would be a little tough to kind of get into it right now. Google, okay, Google's a fair argument. Forgot about Google. Google took a nasty shellacking. Oh, by the way, so when I went to get the motor vehicle registration today, okay, I needed to know two things. A, they gave me this form and they're like, hey, you need to fill out what county you live in and then what your odometer reading is. First of all, I didn't know what county I was in, so I needed to use something to figure that out. Second of all, I didn't know what an odometer was. Odometer, whatever that thing is. I found apparently it's the number of miles you've driven. So I used ChatGPT to find the answer. And this is a really interesting story because A, I didn't use Google to find the answer, and maybe Gemini could help, but then Google doesn't get the search ad revenue, right? Where in the past where I would go to Google to find those two answers, A, where do I live, and B, what the heck an odometer reading is, I use ChatGPT. B, I don't know if I had Apple's new AI phone, if that would have made my life any easier versus just using the ChatGPT app. So Apple and Google, both in very unique positions. I didn't use Google for a basic life task. That's why I'm bringing this up, because this is something people hopefully can relate to, especially all the people in the chat that also did not know what an odometer reading is, because I didn't know what that was either. And for people to realize, like, hey, Google's definitely undervalued on a PE basis, but I didn't use it for a basic task. And I don't know if an Apple AI phone would make me use the AI features to like get a result versus just the ChatGPT app on my phone. So two things to think about when we think a little bit more about AI from the hyperscaler perspectives like Google and Apple. I didn't know what an odometer is, okay? Like I filled out the front of the form and then I handed it to the lady and she was like, you got to fill out the back. And I looked at the back and it was like, what is the odometer? I was like, what the fuck is an odometer? Like, where this? And then I looked at ChatGPT. I was like, oh, it's how many miles I've driven. I was like, why didn't they just say that? Why did they have to say odometer, dude? Why did they have to, like, it was so weird. But anyway, I figured that out today with the help of ChatGPT. Okay, what else are you guys saying? Rocket Lab's undervalued. Rocket Lab's up a lot this year, though, dude. Rocket Lab, again, when I mean undervalued, I mean in the next 6 months, you're going to get, or let's call it 12 months, you're going to get a decent return. Rocket Lab's up 40% year to date and 84% in the past 6 months. Now, that doesn't mean it can't still be undervalued, but the idea that the thing just keeps running, any of these names, is a little bit tough if they've run so much. Walgreens, yeah, I would say you could say Walgreens is undervalued, but the problem is there, any fundamental value to the core business itself? And I don't know if the answer to that question is correct, especially with the declining sales. So you could argue theoretically it's undervalued. I would argue that, the core business is failing right now, which is in a bad situation. Celsius, I don't know if Celsius is super undervalued right now, dude. I don't know if Celsius is super. I mean, their sales are slowing down, right? That's something to at least think about. SoFi, the 2027 leaps came out. We started talking about that this morning. SoFi, great day for SoFi, by the way, up 4%. I still have my options expiring in Jan 2025. The highest amount you can buy is $15 on the 2027 leaps. Am I crazy to think SoFi is definitely going to be 15 by January 2027? Like, is that crazy, or is that PayPal? Yeah, PayPal, I would agree. PayPal's definitely undervalued. I would agree with that, PayPal. So my point is, of the reason I asked that question is because there's not that many stocks we can name outside of like the SoFis, the PayPals, maybe the Celsiuses of the world that are deeply undervalued because everything is up this year. Like most stocks, if it's not a shitty company, has done well. And so, that's why it's a little tough to still buy at some of these levels unless you have a 10-year horizon. But I don't know. Am I crazy to think SoFi at $15 January 2027 is like gonna happen? That's 2.5 years from now. We're asking a double in 2.5 years. Most people that I talk to think SoFi's fair value is 15 right now. I agree and I disagree with that to some extent. But I don't know. That seems like one of the most attractive 2027 leaps that exists right now. Didn't buy any yet, but I did look at it today. I wouldn't buy it on a day that SoFi is up this much. You want to wait for a little bit of a pullback. You said in 2023 it's going to be 15 by the end of 2024. Okay, so I didn't say that. Stephen Fiorillo said that. and Stephen Fiorillo now hates SoFi, even though he didn't sell any of his shares. Every time I get him on the market close, I was like, hey, you want to talk about SoFi? He's like, nope. He is so mad that they chose to do this whole banking infrastructures thing for small businesses only with like American Express and not internally. And so that's why he's really pissed off about it, but he hasn't sold his shares because he loves Noto. But I mean, I agree with him. I did think, hey, by 2024, SoFi should get to 15. The growth is definitely there. The question is the market going to value it as a company that's growing or as a bank? Because if it's a bank, you could say it's overvalued at $8. And that's the terminal debate that keeps on happening when it comes to SoFi. Where's Intel right now? Intel definitely just made some call buyers very happy. Where's Intel? Wow, dude, it's up 10%. Holy guacamole. Intel is up. Intel is up. Block, I don't know that. I like Block, but I don't really like Dorsey's leadership of it. They've had a good year. It's not like they've had a bad year. I don't know if it's deeply undervalued, especially because the stock-based comp is also a bit tough as well. So I don't know if I would say Block is like super, super undervalued. Chewy's had a good run this year as well. You could say energy stocks are undervalued, but it just depends on, where oil is going to go over the next 12 months. And if it stays flat, then energy is not going to do too well. Meta, Amazon, and Disney, in terms of undervaluation, I don't know if Meta and Amazon are super undervalued in the next 12 months. I would say, over the next 10 years, 100%. But Meta year to date is up 54%. And then Amazon year to date, a little bit less than Meta, but 23%. So both have still done very well. Not saying they won't be good buys 12 months from now. Just like super, super undervaluation, like Meta at 150 or even 200, or Amazon at 90 or 105. Those prices don't exist in the stock market right now. The only closest thing to the Max 7 is Google. And that's because they've been smacked by this whole DOJ thing. And then maybe you could say Nvidia, if you believe they're really going to put up, $5, $6 of EPS growth. But even Nvidia had a nice little rebound. If it was at $90, I would say 100%. But now that it's closer to 120, a little bit tougher to justify it. And then it's obviously Tesla. But Tesla's not putting up the numbers. It is all based on the story, and hopefully the story plays out on that 10-10 event. SoFi right here down a little bit after hours. Intel still up 10.5%. So it seems like this Amazon partnership is very bullish for Intel. SMCI down about 1.76% today. Let's go to the semi names and see how they did today. ARM, wow, down 6%. Lam Research down 2%. Dell was up 1%. Micron got hit, down 4%. TSM down 2%. Qualcomm down 1%. Broadcom down 2%. ASML down 2%. ON Semiconductor down 2%, down another 1.65 after hours. SMCI down 2%. AMD down 1%, Nvidia down 2%. How funny is it that Intel was up 7% on the day while all the semis went red besides Dell, which was barely up, and then they're up 10% after hours? I think, in my non-professional opinion, somebody knew something that was going to happen after hours, which is why Intel was the only semiconductor name that was green today by a factor of 7 compared to all the other names that were down by 2-3%. Someone always knows. Someone always knows. Brian says, breaking news, MicroStrategy, another 700 million private offering. No way. Did they actually do it again? Dude, they just bought $1 billion worth of crypto on Wednesday. Are they actually doing it again? Holy crap, they're doing it again. This man, Michael Saylor, either he's going to be the richest guy in the world or shit's going to hit the fan. They are preparing to buy another 700 million of convertible. Well, they're doing an offering of $700 million of convertible senior notes, which would buy them, if we do some quick maths, 700 million divided by 60,000. They're buying another 11,000 Bitcoin. They're buying another 11,000 Bitcoin. Wow. Are they up after hours? Dude, if this works for Saylor, dude. Yeah, I just want Bitcoin to work now so Saylor doesn't go belly up, because it would be pretty sad to see that whole thing collapse if Bitcoin falls below their average, which is going to be closer to 40,000 after they do this purchase. Right now it's like 38,000. MicroStrategy right here at 133.24. I think all of us have lived with like leverage in our lives in terms of like, hey, we have some options, we have some leaps, and you go to bed at night and when you wake up, your portfolio can be volatile based on the day. And, you kind of deal with the volatility because there's some outside alpha you can get from that leverage. But I mean, dude, this guy is like on $15 billion of leverage. It's like, I would imagine when he sleeps at night, like he sees Bitcoin in his dreams or something. Like, dude, that's a lot to deal with. That's just like, at the end of the day, he's still human. He's trying to corner the market. I would agree. I would argue he's trying to corner the market to some respects as well. But there you go. MicroStrategy right here at 134.53 under. Let's see how crypto stocks did today. BTIX went down about 6% on the day as Bitcoin fell about 3%. CleanSpark down 3%. Coinbase down 1%. All the miners took a little bit of a hit. WGMI was down about 2% on the miners themselves, and Marathon as well, down about 2%. All of them had good weeks last week. but now they're kind of struggling, waiting for Bitcoin to get a little bit more momentum. Fintech, PayPal was up about 2% on the day. Affirm is up like 50% for the year as well. This one's doing good. Robinhood, 22.21. SoFi, 806, up 4%. Coinbase is the one that got hit the most, and then Square was up about 2.8% on the day as well. Now, in terms of Robinhood is up 57% from the August 5th lows. Again, I think it is really based on what the Fed is going to do and how the market interprets what the Fed is going to do. So let's transition into talking a little bit more about the Fed. But as long as the market interprets it as bullish, whether it's 25 or 50, I think Robinhood's going to do fine. And I think the market's kind of pricing it in for like a soft landing right now. But, we're going to have to see how the Fed ultimately, or at least how the market reacts to what the Fed says. So let's go to the CME Fed Watch tool. In the morning, it was 52.52. And then by the end of the market close, it changed to 60.30. Now we're still at those same levels. Market is giving a 63% chance that we will cut by 50 basis points. It was 50-50 in the morning, a 37% chance for 25 basis points. So market's asking for 50. The Fed doesn't want to upset the market in terms of their first part of the cutting cycle, or their first introduction to the new paradigm of how the Fed's going to be interacting with monetary policy. I imagine they don't want to make the market upset, but I kind of think they're going to make the market upset. Let's do a final poll. I mean, it's not a final poll. We'll do another poll on Wednesday, but I'll put a poll in the chat. I really do think we're going to get 25, dude. I don't think we're going to get 50. As much as I think 50 does make sense, I just think that J-Powell doesn't want to piss off too many people. Also, here's the thing about doing 50. If you do 50 right before the election, one could argue that it's a little bit more political. And J-Powell's done a pretty good job not seeming super political in a lot of respects. 50 right before the election, I don't know, dude. I'm not saying it is political, but it can be interpreted as political. And I don't know if J-Powell wants to be interpreted as political. Now, you've got a bunch of people on the Fed that are saying we really need to loosen monetary policy. Bill Dudley wrote he was a former Fed president of New York. He wrote a op-ed on Bloomberg, and he said it's time to cut aggressively. But I don't know. I don't know if the Fed's going to be easily convinced that 50 is reasonable to do. We got 60% of you that say 25, 38% of you say it's going to be 50. You have to submerge your hand in a jar of mayo for 5 minutes if it's 50. You know what's so funny? I think I told you guys this on Friday, but that Wendy's lady that I interviewed at AIPCon in the halftime show, I was at the reception with her a night before, and I was talking to her about mayo, and I was like, why does Wendy's have mayo? And she's like, what are you talking about? I was like, we have to offer mayo. I was like, yeah, well, mayo is really bad. And I was trying to convince her it's bad. And she was like, I cannot convince Wendy's supply chain ecosystem to get rid of mayo. I was like, why not? You run the whole thing. You're at AIPCon for a reason. And she's like, I can't do that. I was like, but why not? So I spent an hour trying to convince her. Unfortunately, I couldn't get it done. But if it was up to me, you guys would not have your mayo at Wendy's. So I tried my best. 50 is not panic mode. A full 1 would be panic. 0.5 is playing catch up. Yeah, I mean, look, I think 50 is not panic mode, but I think the market would interpret it as panic mode. We had Elizabeth Warren, our good friend, today came out and she said, hey, why don't we do 75? So you got the politicians that are saying it is absolutely time to cut aggressively. Mortgage rates came down to about 6.12% on the day, with the expectation that rate cuts are going to be coming down. There's other countries this week that are going to be announcing cuts or raises, most likely cuts as well. So we're going to see what happens. But the politicians want cuts. They would love 50. You could argue that they're saying 75 to pressure J-Powell into doing 50. I still kind of think we end up getting 25 at the end of the day. Here is what JP Morgan says around the rate cuts. They think that it is probably going to be 50. I think they might be wrong, but let's see what they have to say.
Or one of the last ones out to hold for a 50 basis point rate cut from the Fed when it meets on Wednesday. Are you sticking with that?
Yeah, we're still sticking with the 50 basis point call, but it is a debate, internally within the broader marketplace. But honestly, I think the market is more focused on the growth story than whether it's 25 or 50 basis points. And I think that, the sense is, the recession risk, it could be out there later in 2025 in the second half of the year, but it's not imminent right now. now. So when I talk to investors, 25 versus 50 isn't so much the debate, but really just how does the U.S. growth story look?
But so why are you so confident on, I guess, this jumbo rate cut? And does it actually make a difference on growth?
Well, I think they have the scope to make this rate cut right now. And right now you are seeing all of the signs pointing to doing more would actually probably send the right signal. When you look at the labor market conditions, that the upside pressures on inflation are waning right now, and that when you actually just look at just how restrictive policy is, there's a scope to do 50 right now. But I don't think there's consensus yet.
Yeah.
So it could still be 25.
So do you think the Fed is actually behind the curve? Because I think you're expecting 50 September and then 25 in December.
I think there is a debate that the Fed is behind the curve, but I'm not as worried about the labor market as some, because the household surveys are not showing that there's a lot of consumer demand is still there, and there's not a lot of job shedding that's going on. So I think that debate is going on. It's whether the Fed's tone, no matter what, I think is going to be relatively dovish.
But so you're expecting actually 50 September.
So again, they're going back, JP Morgan's going back to this consumer argument. And this consumer argument that I think the chat, you guys have been divided on for the past couple of months now on, is the consumer actually struggling or not? My stance is that yes, they're struggling, but they're not struggling to the point where full-on recession. I think that's a reasonable take given some of the earnings growth that we've seen, but I also think it's very reasonable to have concerns about how the consumer is ultimately going to play out over the next 5 months. JP Morgan, Bank of America, a lot of these big firms are relying that the consumer is not going to be in as bad of a situation as, the market thinks they're going to be. And that's why the rate cut, whether it's 50 or 25, might not matter, because if the rate cuts are going to be, happening, if the consumer is still going to be spending, then 25 or 50 doesn't really make their life that much better if they're going to keep spending. Gold right now, you got gold at an all-time high. So that happened 20 minutes ago. Rate cuts are bullish for gold. So, gold looks like it's pricing in potentially some rate cuts here as well. Ironically, Bitcoin, that theoretically should benefit way more from rate cuts than gold because of increased liquidity, is not really seeing that level. Now, I was listening to a little bit of Bitcoin analysis over the weekend, and I think it's the same argument. It's not a unique argument I'm about to make, but a lot of the argument is that the ETFs pulled forward so much demand on Bitcoin. So people are upset, like myself, irrationally, that it's at 58,000. Why isn't it not at 100,000? Well, one could argue without the ETFs, there would not be the trading volumes from retail. If you look at Robinhood's numbers or Coinbase's numbers, the trading volumes have been horrendous compared to what they were in 2021 without those ETFs. We would not even have Bitcoin probably at 40,000, much less 35,000 without the ETFs actually gobbling up. I think at this point it's close to $35 billion of Bitcoin, something like that. I know BlackRock themselves have 20 billion. So, and that's all in 6 months in terms of ETF inflows. So it is one of those things where, hey, maybe Bitcoin, the interest rate liquidity stuff will help, but maybe it doesn't, because the ETFs did their work this year. And really the run was from 25 to 50 or to 60 or maybe 70 at the top versus a run from 50 to 100. If it happens, it's great. But at this point, I think we kind of have to see how Bitcoin's ultimately going to play out. Q4 usually is good for Bitcoin. I agree. So now we're going to have to see, what happens in Q4. One interesting trade idea that I've been looking at, and I have not executed on this trade, but I know some of you have been talking about it, is TLT. So TLT was up 1% on the day. The reason TLT was up is because there was an argument that rates are going to come down. When rates go down, TLT goes up because it's essentially a treasury bond. So if you look at the 5-year chart on TLT, it was at 161 back on March 2020. Why was it at 161 in March of 2020? Well, Jay Powell cut rates to 0 because we were entering into a pandemic. So TLT did very well. You can see right here in 2018, it was 97. It's at 101 right now. In 97, I think interest rates reached a top of 3.5%. I could be wrong on the exact numbers, but it was about 2.75 to 3. And then it obviously we started cutting. And why do we start cutting? Well, we got into a pandemic, right? And in 2019, we had 3 cuts. And then 2020, the pandemic made us cut completely. So we went to 161. That topped out for the cycle. And then we started raising, and TLT obviously started doing horrible. By October 2023, it had bottomed at 79, and now it's done really well since October 2023. It's underperformed the market. Or has it underperformed the market? Hold on, let's see. So 101 minus 79 divided by 79. No, it's outperformed. Well, has it outperformed S&P? Where was S&P on October 2023? Let's see. October 2023 was 408. So 562 minus 408 divided by 408. No. So S&P is up 37% from the bottom of 2023. TLT is up 27%. So it has underperformed the market, but it's done well. If we were to get 50 bips tomorrow or on Wednesday, I think you could see TLT continue to do well. And I think over the next year, if normal rates get down to, call it 2.5, we're at 5.5 right now. I think TLT gets closer to like 120, 125-ish. So there might be a trade to be made there. Seems kind of obvious of a trade in my perspective, just because we think rates are coming down, but we don't exactly know how the market's going to react to rates coming down. And obviously we don't know if the Fed's legitimately going to do what everyone thinks they're going to do, which is 100 bips at least by the end of the year. And then the market's pricing in 200 bips of cuts by the end of 2025. There is an argument that inflation could reaccelerate. And if inflation reaccelerates, that would stop them from doing that. I don't think that's going to be the case given how we're seeing inflation come down, but that is the risk to looking at TLT. So haven't invested in them. I'll make a decision tomorrow if we do it maybe right before the Wednesday meeting, but I think it was up today because 50 basis points futures chances and the probabilities of that started to go a bit more higher right now. Gene says, Amit, did the state senators just try to bait the Fed into giving us 50 bips by publicly asking for 75 bips, which we all know is crazy, will make 50 bips seem less aggressive? I don't think that's what's happening. I think some of those senators are just crazy. That's what I think is happening. I think Jay Powell has made up his mind. I don't think tomorrow he's going to make his decision over if it's 25 or 50. I think he's made up his mind. He knows what's going to happen. And he's like gung-ho on that. And I personally think it's 25, but if it's 50, I don't think it's the worst thing in the world. Now I think Elizabeth Warren's just like crying to try to show her supporters, hey, I'm really trying to get Jay Powell on your side. I'm really trying to make sure your cars are less expensive. I'm really trying to make sure your mortgage rates come down. But unfortunately, this evil boogeyman is not cutting the rates, even though I'm compelling him to cut the rates. I'm grilling him in Congress. I'm sending him letters. It's not happening. Unfortunately, and this is not a Democrat or Republican thing, unfortunately, all of those politicians don't realize the amount of spending that they did and money printing that they allowed is what caused Jay Powell to raise rates as aggressively as he did. And all he's doing is reacting to the fact that we had inflation at the highest levels since 1980. So, I don't think it's any public plan. I think it's just them virtue signaling to their supporters, and it's probably effective. But, we're going to have to see what happens with what Jay Powell does. But 75 is not going to happen. And they know 75 is not going to happen, right? That's why I'm saying it's virtue signaling. Like, they know that's not going to happen. And it would be a massive shock to the markets. I think we would sell off aggressively if we do 75 because the market's like, all right, there's definitely a recession happening and we don't know where it's coming from, but the Fed just told us it's basically happening. MicroStrategy down about 1.34%. But we're not going to get 75. It's going to be 25 or 50, and then the market's got to figure out if it's bullish or not. Intel right here, up 8.75%. It was up 11%. Now it's up 8.7%. SoFi up a little bit after hours. Oracle up again after hours. Bitcoin trying to maintain some momentum at that 58,000 level, but it is down. And then small caps right here at 217 on the day. Palantir after hours, 36.39 on the day. In a couple hours, I'll be releasing a video with a customer for Palantir, so watch out for that. I think it'll be a fun video to get into and to learn a little bit more about how they're using the software. But overall, great day for Palantir, man. I mean, up 2.7% is not too bad. How many people think we touch 40 by the end of the year on Palantir? Put in the chat. How many people think we could actually touch 40? Because the price action today, dude, it was kind of crazy. And I know 40 is ridiculous. I understand the valuation makes no sense. I get it. Like, I'm not out here trying to say it's definitely going to go to 40. I'm curious what the sentiment is like. You got the S&P rebalance on Friday. Typically, stocks fall after the rebalance. Maybe this is a pump before the rebalance. We're going to have to see what happens. But who knows, man? Maybe there's a shot. Especially if Q3 earnings is like nice. If Q3 earnings is nice, we might have a chance. Mark says Europe is at 3.5%. We are way too tight. What is wrong with you people? Look, I agree, Mark. Look, it's time to cut rates. I agree. Which is why I think the market's going to be upset if we do 50 because they're like, oh my God, recession. Then they're going to be like, holy crap, we are so tight, dude. If we are so tight, 50 only makes sense. We might as well get it over with, rip the Band-Aid off. And I think the market will whine about it for a couple of days and then they'll move on. Kind of same thing with the debate, same thing with the Bitcoins. The market's whined about a ton of stuff this year and then they just moved on because earnings were good. And rate cuts only will make earnings better in the context of different companies that will be able to do different things when the cost of capital is lower, and also for the broadening of the rally, small caps that can better perform S&P 500 companies if they have rates that are lower. So I think the market's going to get over it, but I don't know if the Fed's going to, or J Powell's going to actually give us those 50 bips. And so we're going to have to see. We're really going to have to see. Wednesday is going to be a surprise, dude. Wednesday, I think we have no idea what's coming up. A lot of people say 40. Interesting. A lot of people can see 40 by the end of the year. I can see it. I don't know if it'll get there, but I can definitely see it. I know covered call premiums are great right now. So if you think Palantir is overvalued here and you have a covered call, and even if you sell a covered call, well, you can make money on the covered call by selling it below the strike, right? So Palantir's at 36. If you think it's not going to be more than, call it 33 by the end of the year or by the end of January, whatever it is, you can sell a covered call that's deep in the money and collect a crap ton of premium betting that the stock goes down below your strike. Now that is risky, because if it stays above the strike, you would have to sell your shares below the current price where it's at. You could always roll it and stuff, but it gets into a little tricky situation. But if people believe that Palantir will take a nosedive, then covered call premiums are printing pretty heavily right now. The problem is the whole year for those people, it just hasn't taken a nosedive. It's been straight up, and really it's been catalyst after catalyst. Oh, there's another catalyst today that I didn't get to show. My boy GoCarp found this. But remember that Maven contract we got? So another organization has signed on to use Maven today. SAAB, they work on AI, ML, and they include contracts with California Air National Guard for wildfire tracking, DARPA to modernize the stability and control surface vessels, and the Office of Naval Research to increase battlespace situational awareness by automatically detecting and characterizing threats in complex environments. It makes sense that they are now using Maven. So this is not a new contract for Palantir, but this is the broader Maven system that they've designed being used within another subsidiary of the overall agency that gave them the contract. And it makes sense they're using it for things like California's Air National Guard for wildfire tracking because of the geospatial intelligence portion of Maven. Remember, Palantir got a $480 million contract 2 months ago. $153 million, or 31% of it, was guaranteed up front. And the reason this is bullish is because the more people, the more agencies, the more entities that use Maven, the stickier it becomes, the more money Palantir should be able to make when they renew Maven in the future. You know, they charged $500 million for 5 years. What if they do $1 billion for the next 5 years at the end of this 5-year contract? That's kind of the goal here with these military army contracts. And the question is just, how much pricing power can Palantir get? They have to give more value. And the more value they get, the more value the customers get, the more ability Palantir has to charge higher prices. So I think, again, the government stuff is underrated. Oh, Mariana, I forgot. Let me read this to you guys as well. So Mariana, Bank of America. Dude, Mariana is bullish. She came out with a note today, and I think she's even starting to realize that the commercial sector and the government sector is starting to continue to run. So she wrote a note on AIPCon 5. CEO Dr. Alexander Karp kicked off the 5th AIPCon, particularly excited about the recent inclusion into the S&P 500. Karp sees the welcome to the exclusive club of the S&P 500 as a major event that recognizes Palantir as an actual serious company. He also highlighted all the success has been built on top of powerful products, strong values, and the very best people and partners. All these factors support continued growth ahead. Karp is convinced that Palantir could be 10x larger than it is today. That would be an $800 billion company, call it just $1 trillion. We see Palantir as a key enabler of the partners' acceleration, driving material results to strengthen their business, and in turn, Palantir, we reiterate our buy rating and price target of $50. I'll put the tweet in the chat so you can read the entire report, but again, they are bullish. And it seems like the street is starting to discover some fun stuff on Palantir. Do I think SoFi will finally see a short squeeze with rate cuts this week? I don't know. And that's why I'm a little, I don't know. I don't know what we're going to expect with SoFi. So if you looked at SoFi's latest short float as of August 30th, it went down, but not down by a lot. So let me show you guys what it is. It's still at 18%. It's still almost 200 million shares that are shorted. And although I think rate cuts are obviously very bullish for SoFi, 190 million shares, 18.6% of the float. Although I think rate cuts are very bullish for SoFi, I don't know if the shorts are finally going to say, all right, it's time to let go of this. I think the shorts are going to be stubborn, and they're going to need a real catalyst, not just rate cuts. And I would assume that catalyst is increased Q4 guidance, which hopefully we have 50 bips of rate cuts built into SoFi's guidance probably 100 bips actually before October 28th, which is when I think they give their earnings. But that is what I think is what it's going to take for the shorts to finally like let go of SoFi. Until then, I don't know. I don't know if rate cuts are going to be enough. Now, maybe the shorts are starting to let go of SoFi because that was August 30th. It's been 2 weeks. And so we'll see the September 15th updated metrics on the short float. But so far, the shorts have still been in control of the stock, even though the stock has done well over the past couple of weeks. It's just a question now of, will the shorts finally give up and move on from it? And so I think at 25 or 50 is going to determine a lot of that as well. And we'll see. I stopped selling covered calls on SoFi because of the potential run. I don't disagree with that. I think I've been saying $9 on SoFi by the end of the year. That's been my target. Some people think that's too low. I think that's reasonable given it bottomed at like $6. So I think $9 would be cool. If we go above $9, that would be amazing. I do think the guidance increase can get us there. Unfortunately, I think the tech side of the business is not growing as rapidly. And if it does, then I think it's really easy to get above $9. If it doesn't, which Noto hasn't really talked about it at all over the past couple of weeks, I would imagine, it stays stable, which means lending has to increase, and lending will increase as a result of rate cuts. So now they just have to increase their guidance for rate cuts based on rate cuts, and hopefully that helps a lot. What else do we have right here? They said rate hikes were good for SoFi. Yeah, unfortunately, dude. Rate hikes only ended up being good if you could adapt to the rate hiking cycle. So we talked about it this morning, but rate hikes were not good for Palantir, but Palantir adapted to the rate hikes, right? Rate hikes were not good for Robinhood. I mean, it was horrible for Robinhood in the first year, but they adapted to it. So, it's a question of, for the Max 7, it didn't matter because they have so much cash that they didn't, rate cuts really didn't change that much for their overall businesses. They just focused on buying more GPUs from Nvidia and building out their infrastructure. So really it hurt this guy really badly, IWM. And this is why Tom Lee is pounding the table saying, hey guys, this thing is going to run when we get the cuts. It's just a question now of how many cuts do we get, and will the market actually recognize small caps as legitimate companies to invest in? Because some of the companies obviously are not the best companies, and they're filled with debt, and they're not profitable, but they theoretically should do better if we get rate cuts. And I think the market's going to have to ultimately determine that soon. You're 27 years old and you don't know what county you've lived in for the past 10 years. Okay, first of all, we moved here 4 years ago. All right, so it's not it's not the past 10 years. Second of all, I know the name of my town, but I didn't know the county. Does everyone know the county in which they live in? For the people international, I don't know what's the synonym for county, like municipality or whatever. Does everyone really know the county they live in? Does everyone even know the zip code they live in, bro? It's not just me, bro. It's not just me. I didn't know what county I lived in. I figured out today because of ChatGPT, and I figured out what an odometer is. Also, people were trolling me. Hold on, I want to show you guys this, and then I want to listen to Bill Dudley on rate cuts. People were trolling me because I put out this video today when I was driving and Palantir was running and I couldn't check Palantir. So I was saying, hey guys, if it goes to 37, just hit me up. And apparently everyone's upset that I'm driving with my headphones on. Well, let me just say this, okay? This is not my fault. It has been 2 years and my phone does not connect to the Bluetooth in my Honda Civic. Now, as soon as I say that, I know some of you guys are like, wow, this guy's a fucking idiot. He can't connect the phone to his Bluetooth. I invite anyone to come into my car and try to connect their phone or my phone to the Bluetooth. It doesn't work. It does not work. It worked with my iPhone 12, and then I got the iPhone 15 in 2023, so it's basically been a year. For a year, it has not been able to plug, or it's not been able to connect. Also, it doesn't connect even when I plug it in through the physical port. I don't know what's wrong with it. So, a couple months ago, I just got so tired of it because I wanted to listen to stuff in the car and not just keep my phone on speaker. I wanted to actually hear it, so I just brought my headphones. And so now I drive around with my headphones, and it's even better quality than living to it on Bluetooth. I know it's called pairing mode, Chris. I'm going to take a video and show you guys one day, dude. You guys don't know how much I've struggled with trying to connect my phone to the Bluetooth. It hasn't worked. It just hasn't worked. I know you guys don't believe me, but it has not worked. And that's led to me, driving around with my headphones. So I know people think it's kind of weird, but that's all. That's I still need to listen to my music, bro. And so, by the way, the only time I listen to music is in the car. So that's also why I need it. It's my car is 5 years old, which is why it makes no sense, dude. My car being 5 years old, it makes no sense. Obviously, the Bluetooth should be working. I'm telling you, bro, it's not working. It's not working, and so You should get a Bluetooth speaker. That's true. But I'm wearing my headphones all day anyway, to be honest. So dude doesn't know anything unless it's Palantir related. It's illegal to wear headphones while driving. All right, well, fuck. I better not get caught. Is it actually legal to wear headphones while driving? Hold on, let's ask ChatGPT. Is it illegal to wear headphones while driving? I mean, I've definitely pulled up to some cops in front of me and my headphones were on and they haven't stopped me. So California, Maryland, or Virginia prohibit the use of both ears being covered by headphone. In the United Kingdom, it's not illegal, but it causes distraction. Okay, what about New Jersey? What about New Jersey? Let's see if it's illegal in New Jersey. In New Jersey, it is illegal to... Fuck, dude. I'm such an outlaw. Oh my God. All right, so I better not get caught, or I better fix the fucking Bluetooth. Oh my God. It is illegal in your county, but since you don't know what county you live in, how would ChatGPT know? That's funny. I'm gonna take a video tonight and I'm gonna post it on Twitter and I'm gonna show you guys how hard it is to connect to Bluetooth. It's not me. But I better not get caught now in New Jersey because apparently it's illegal. ChatGPT just told me. Okay, so I want to listen to Bill Dudley. This is a 9-minute interview. Let's take a listen to this. He thinks the Fed should go big with 50 bips. Let's see what he has to say. He was on the former he was on the Fed, the former Fed board of directors in New York. So let's see what he has to say, and then we'll keep going from there. Here we go.
To say with any precision, but I think it's pretty simple to say that the dual mandate objectives of inflation and employment now are pretty close in balance, yet monetary policy is still quite restrictive. Most people think that neutral is somewhere between 3 and 4% on the federal funds rate. So call us, 150 basis points away from where we should be.
If we have a vector of whatever it is, economic growth, disinflation, whatever we draw up in our minds, Peter Orszag would call it a glide path. Which is the glide path right now that matters to Bill Dudley that says this Fed's got to get up and go?
I think the main issue is the fact that when the labor market tends to deteriorate, it either tends to deteriorate a little or a lot. So you don't want to go past that threshold where the labor market starts to feed on itself and continue to worsen. That's why you want to take out insurance now by going more rapidly rather than going gradually.
So, Bill, in your Bloomberg opinion piece today, you note that the two objectives of the Fed's dual mandate, that is price stability and maximum sustainable employment, that they've come into much closer balance, suggesting that monetary policy should be neutral. But we're pretty far from neutral. So how do we get to neutral and how quickly do we do that, Bill?
Well, I think the reason why the Federal Reserve is going to do 50 basis points this week is to get there more quickly. Now, the good news is a lot of easing's already priced in over the next year and a half. So the market's priced in 250 basis points by the end of 2025. So it's not absolutely critical that they do 50 versus 25 today, but doing 25 would have been awkward because it would have disappointed market expectations. They probably would have shown only another 50 basis points in their summary economic projections. So the Fed would be essentially saying we're only going to do 75 basis points this year when the market was priced for about 120.
So Bill is saying 25 would be awkward and disappoint the majority of the market. If that's the case, Jay Powell, I think, is about to disappoint the majority of the market unless he's listening to Bill Dudley. But I guess we'll see what he says.
So I think doing 50 brings the Fed more in alignment with the market, and it also fits the logic of the moment.
Bill, do you have a concern or a reasonable concern that by maybe going slower than they should, that inflation gets back, recession gets pulled back onto the table?
Well, I think there's a risk of that. I mean, every time the unemployment rate has risen by more than 0.5% on a 3-month moving average basis over a 12-month period in the United States, you've always had a recession. We've actually hit that trigger. Now, I don't think that trigger is a hard and fast rule that has to hold every time, but it does tell you that when the labor market deterioration goes on beyond a certain point, it tends to become self-reinforcing. The next, stop after a 0.5% increase is 1.9 percentage points in a full-blown recession. So that's the risk the Fed's taking by waiting.
Hey, if the Fed only goes 25 basis points, do you think we'll get a dissenting vote there?
I would think so at this point. I mean, I think what's essentially happened is the Fed changed expectations last week with those two articles that came out in the Wall Street Journal and the Financial Times, sort of suspicious articles, because they basically reopened the possibility of 50 when that was sort of getting closed off. Since that time, we haven't had any, Fed intervention in any way that's visible. So it seems at least that the Fed is comfortable with the shift in expectations away from 25 to 50. So I don't think, as time passes, I think what's going to happen is we're going to continue to price more in the direction of 50.
Okay, I'm going to go nuts here. And, thanks. Marty emailed it. Marty, thank you so much for listening this
On the
morning.
5th floor.
Bill, I'm sorry. We've got a shattered way of communicating. We have basically back X number of meetings a dissent-free Fed. I mean, every love, peace, love, and dope. I get it. We are the world. We are committing Fed policy and discussion through a reporter at the Journal. Who's the reporter at the FT?
I know.
Smith. Oh, Colby Smith.
Colby Smith.
Yeah, Colby Smith. Okay. Come on, Bill. This is baloney. How did we get here? Do you blame Alan Greenspan? Lawrence Meyer, Washington University, St. Louis, would say it was a term at the Fed where Alan read everything. Is that where this started, Bill Dudley?
I'm not really sure why we've landed where we've landed. I agree with you. This is sort of awkward. You really shouldn't be communicating through these sort of articles in such a subtle way that some people get it and some people don't. That doesn't seem to be very fair for people to get the right signal from the Fed. I think what basically happened was the issue of 25 versus 50 was getting sort of closed off as you approached the blackout period. Powell didn't want it to be closed off because he was actually thinking pretty strongly about 50 basis points. And this was the way to keep it open. And I think what's happened is people have reflected on it a bit more. The logic for 50 has become very compelling to people. And that's why I think that's what the Fed's going to do at this meeting this week.
I want to make a distinction here. This is not an Alan Meltzer 50. I mean, we're not showing up at the discount window because the world's falling apart. Is this like an original 50 beep cut that we're getting because of pandemic mysteries, because of unknowns, or frankly, Dr. Dudley, because of too much information?
Well, I think they're just started a little late. I mean, a month ago or so, I said that they should have cut rates in July. So if they'd done 25 in July and 25 in September, they'd be in the same place. So I think it's a little bit because the labor market has weakened more quickly than they were anticipating. Remember, we had those very large downward revisions to payroll employment. And then the last 3 months in terms of the payroll gains is the lowest 3-month period since 2020. So there's been a distinct chilling of the labor market, and that's happened fairly rapidly. Now, the Fed is, reasonably comfortable that that's mostly due to the fact that the labor force is increasing, and that's what's pushing up the unemployment rate. But there are quite a few signs that the labor market's a little softer than it was, and I think that's what's maybe surprised the Fed how quickly that's come on.
It is such an incredible intellectual debate around 25 or 50. I mean, you got someone like Bill Dudley, was a part of the Fed for a while. Obviously, he understands the internal politics and dynamics and the psychological perceptions of what the Fed, what decisions the Fed makes and how it reflects on the broader markets. Palantir right here up a little bit after hours. And he thinks 50 makes sense because we should have done 25 in July, which is a very reasonable argument. But you've got a lot of other people saying that 50 is just a bit too aggressive to start, even if they know they're going to keep cutting. I think one point he made that does make sense is that if you only do 25 and then you only have 2 other meetings and you only do 25 in those meetings, you're only doing 75 for the rest of the year. The market is pricing in 125 for the rest of the year in terms of bips. So like if you do 50 now, at least you're on track to get to that 125, unless you do 50 in November and December. November is the day after the election or 2 days after the election, which I hope to God we know who the president is, whether it's Trump or Harris, 2 days after the election. Because if we are still wondering 2 days after the election who's the president, I mean, J-Pow is going to be in a hell of a little predicament to engage in aggressive or potentially non-aggressive monetary policy without understanding what administration he's going into. And then we have the December meeting. But when is that December meeting? December meeting is 18th, December 18th. And the Fed and the November meeting is the 7th. So, to end out 2024, this meeting is going to be really important on the 18th, which is in 2 days, because that's going to determine what at least the market thinks the trajectory will be going into November and December. This is going to be really interesting. This is going to be really, really interesting. For everyone saying I have to repair my phone or I have to unpair my old phone. So I don't have my old phone. I sent it back to Verizon to trade in to get this phone. So I thought that if your phone gets reset, that phone is gone from the pairing, aka it's unpaired. Apparently it's not, based on what you guys are saying. So I might have to call up Honda, which is so much work, dude. Other than just like it's easier to just put on headphones, but I guess we'll have to do that, because if not, I'll get pulled over in New Jersey and get arrested for wearing headphones. No, you delete it. Okay, well, I feel like I deleted it. I guess not. I guess not, dude. Like, I thought it was as easy as pairing a new phone. Like, it's not like you have to unpair the old phone. Like my dad, for example, he drove my car for a while. His phone is still paired. I shouldn't have to unpair his phone just to repair my phone, my new phone. I thought it just stays in the settings. You get to repair a new one, but apparently not. It seems like you have to do more than that. You're Indian. You should be good with tech. That's funny. That's very funny. Unfortunately, I am I am not the best at tech in general. But I like analyzing tech, and that's a little bit more fun. It's easily on a Tesla. That's correct. It is very easy on a Tesla. I would imagine it's touching a couple buttons, and then boom, you're good to go. So, unfortunately, on a 5-year-old Honda Civic, it's like some complicated process of like pairing and stuff. For Tesla, I would imagine if I had a Tesla, I like literally step in. I like, I just like show my phone to it, or I like just like pairing my Beats headphones. It's like an Apple like experience, and then boom, I'm good to go. You have to be in pairing setup to delete the phone as well. Yeah, see, that's annoying. I don't know why we have to delete the old phone just to pair the new one. That's annoying. My dad the other day was like, "Hey, maybe you should think about a Tesla if it's only 1% APR." I don't think it's 1% APR anymore, but dude, I just don't want another car payment. Like, I've done paying off my car. I'm almost done paying off my student loans. Like, I'm gonna be pretty much free out of debt, hopefully by the beginning of this year or by 2025. So I just don't want to have another car payment to worry about. When I do get a Tesla, though, because I think eventually in the future I'll get a Tesla, dude, I want a Cybertruck. I've been seeing so many in New Jersey. Like, that Cybertruck is so sexy to me. There's this guy who somehow comes to the gym every time I'm at the gym, and I always just park near his Cybertruck so I can look at it. Like, it's a beautiful car. I know people say it's ugly, but I love it, dude. It's a sexy car to me. And in New Jersey, it's ramping up, so I'm seeing a lot more of them. That would be the car I want to get. I don't know if I want the gray color, though. I think I want like a matte black. There's a lot of different colors there that are really interesting. Should we buy the dip on Adobe or not? All right, let's go through Adobe earnings, because I didn't get to do this last week. So let's look at their numbers. We'll end out with Adobe. Let's see what the hell is going on in Adobe. What did they end up saying? Ew, dude, Adobe's so weird. I opened up their press release and they opened me into an Adobe PDF. This is so cringe, dude. Just open up the press release. Why is it an Adobe PDF? Like, I'm an acrobat right now looking at this thing. Okay, so what did Adobe say? Why did they get demolished? So Adobe's record Q3 performance is a testament to our relentless innovation and commitment to delivering value across our customers. In Q3, Adobe delivered cash flows of over $2 billion and exited the quarter with record RPO, demonstrating the power of combining growth with world-class profitability. That's good. Revenue $5.4 billion, 11% year-over-year growth. GAAP operating income was $1.99 billion. That's not horrible. GAAP net income was $1.68 billion. So the margin on that seems pretty incredible. 1.68 divided by 5.41. They have a 31% GAAP net income margin, which is not too bad. RPO is $18 billion. Remaining performance obligations, they bought 5.2 million shares. Cash from operations, $2.2 billion. The biggest problem is their guidance, apparently, and that's what got the street pretty upset. So total revenue, they're expecting $5.5 billion. They just did 5.4. So quarter over quarter, we're really not seeing too much growth. Digital media net new ARR around $550 million. Segment revenue, 4.09 to 4.12 billion. Subscription revenue, 1.3 to 1.25 billion. The problem with this guidance is a lot of the numbers, if you look at the third quarter results, are pretty much the same. It's not that fundamentally different from what I'm seeing. Like digital experience segment revenue was 1.35 billion. For Q4, it's going to be 1.36 billion. So you're not really seeing a ton of growth there. And unfortunately, Adobe has painted this image that their AI moat is that they have the best offering for Firefly, which I think their core product offering, that allows you to type in like girl on a horse eating a chocolate cake, and then boom, a girl on the horse eating a chocolate cake pops up. And then, that allows you to integrate the AI models of their images, basically like a mini Mid-Journey inside of Adobe, to have better editing, better quality content, better operational efficiency, all that stuff. Apparently that's not happening based on this guidance. I mean, and I was skeptical about Adobe in the beginning of the year when they had some crappy guidance back in Q4 2023. We listened to that call together. This was back in February, and I didn't like the CEO. I wasn't a fan of the CEO. He was like trying to convince us that like, oh, people are not going to use Canva, which is what I use, which is like $12 a month. They're going to pay 30, 40, 50 bucks a month for Adobe because our AI set of tools are so much better. And in my head, the reason I was skeptical back then was, wait a second, the majority of people aren't professional editors. Like, I am a content creator. I take this stuff very seriously, but I don't need to be like using all these AI tools to make my editing that much better, at least not $50 a month that much better. So there's a lot of services that allow content creators to edit very cheaply, unless you're in Hollywood working on Adobe. But at that point, you're already paying thousands and thousands of dollars for licenses. That's not the average person. So their argument is that more people creating content will lead to more people using Adobe's AI suite of tools to be able to better enhance that content. And in my opinion, most people are not actual content creators. Most people are just like posting memes and like thoughts here and there, but they're not making a living from content, which means why would they put the investment into something like Adobe to supercharge their content creation efforts? That's where my skepticism comes from. And that's why I think their guidance sucks, because not that many people need to pay 50 bucks a month just for a set of AI tools if they're like a quote unquote content creator. So that's my problem with Adobe. Like, Miguel, I will not pay a subscription payment for Acrobat Reader. Yeah, it's like, I don't know, dude. Again, generative AI is a tailwind for Adobe, but the broader TAM around how many people really need Adobe software, to me, is not that large. Like, there's a lot of creative people in the world, but you've got to be able to make a living off your creativity to be able to justify paying 50 bucks a month. It's just, it's not the easiest to justify that. I only use Adobe services because I needed it for a class and I couldn't cancel for a year. Yeah, there you go. There you go. I like making music, but $23 a month for Audition, that's too much. I'm going to go deeper into Adobe because I don't want to sound super bearish. I want to see if there's a part of the story I'm missing. But when I saw it was down 10%, it wasn't surprising, dude. Like, I know it rallied from like 480 to 550 in the first 6 months of the year, but it wasn't surprising because that core thesis does not seem like it's playing out. Because I should be paying for Adobe. I'm like their target customer, and I'm not. I'm paying 13 bucks a month for Canva. Like, all my thumbnails that you see, the thumbnail today is going to be Neo from The Matrix and Carp. So I put them on the thumbnail because the customer is like talking about The Matrix. I made that in like 10 minutes on Canva. Yeah, Adobe's down 10% for the year. See, it bottomed right here at, bottomed at 439 in June. It was at 600. This was the initial drop in Q4 earnings, 627 to 537. Then it kept going down, made its way back up to 580, almost was good for the year. Now back here at 521. But I made that in Canva, dude. I didn't need something special like Adobe. Let me show you guys the thumbnail right now. This is the thumbnail. This is what I use in Canva. Very simple. Very simple. 13 bucks a month. Easy. It takes me 10 minutes max. Not even 10 minutes, dude. It takes me maybe 3 or 4 minutes when I get the idea, position it, and then boom, you're good to go. It's really not that hard. I tried using Photoshop a while ago, and it was so complicated. Like, even like the delete button and stuff, like it was just so all over the place. I realized, okay, so this is for professionals. I'm not a professional. I don't have the time to learn these tools because I'm not making a movie. I'm making a YouTube video of me talking. So why am I using Adobe? It made no sense to me. So yeah, I just think there's cheaper alternatives at the end of the day when it comes to Adobe. Again, when it comes to the generative AI SaaS, like Adobe's not exciting. Snowflake's not exciting. Intuit's not exciting. There's one company that's exciting, bro. And I think that's why that company is outperforming. And that company is Palantir. 36.31 on the day, down a little bit after hours. Where's CrowdStrike as well? CrowdStrike's had a nice recovery, up 3.35%. Cybersecurity, obviously showing more and more importance. You guys saw on the market open on on Friday, my Twitter account. So apparently the story, I found out what happened, guys. On my Twitter account got hacked on Friday, and someone tweeted like, buy this banana coin for some crypto shit. Of course, they named it banana because I keep talking about potassium and stuff. But if I launch the coin, by the way, it would be called No Mayo. Just watch out. If I do an initial coin offering, it'll be No Mayo coin. But they did it, and I went through all the security checks of what you need to do. Change your password, two-factor authentication. I didn't have 2FA on my Twitter account. Yes, that's bad on my part, but now I enabled it. All that good stuff. It wasn't until I disabled read write third-party apps from accessing my Twitter account that I was able, I believe, to resolve the situation. So what I think happened is there was a ton of apps I connected to my Twitter account years ago, like 2022, 2021, where I was just like connecting these apps that like have third-party analytics features, all this random stuff. Right now, Twitter has a lot of that stuff built into the core product. And I think one of those accounts got hacked. And because they had access to all these Twitter accounts, one of my Twitter account was one of them, they were able to pump the coin. Ironically, if you bought the coin, it was up 30% on Friday. So if you bought banana coin, it was up 30%. So congrats if you saw my fake tweet and you bought it. So they launched this like coordinated spamming of banana coin and through all the accounts that they ended up hacking. As soon as I turned off read write access permissions, all of that stuff went away. And it seems like, let's hope my account is fine, but that seems like it was the biggest thing. Now I have two-factor authentication. Now, if I want to log in on my computer, I have to text the code. I have this authenticator app. I have like all this shit. And I'm working on getting this physical thing that Chad recommended I get to like get all my information as well. Because I mean, like my account's getting bigger, right? So at this point, this is just what happens, right? More money, more problems. As you get bigger, like you have to deal with this type of shit. And so I definitely think this could happen again. So I have to be very, very safe and protecting and take, extra caution. But in that moment, I realized, oh my God, if I needed to pay even $5,000 a year to protect my accounts, like let's say there was some software or something that like guaranteed protects your shit, nothing, you never have to worry about this stuff, I would pay the $5,000. And it made me think of CrowdStrike and cybersecurity. It's like, wait a second, dude. Now, like for that, like think about it. My account getting hacked and tweeting banana coin, relatively harmless because I think most people that follow me are smart enough to know, hey, Amit was hacked, and the situation was resolved. But now I'm thinking of Snowflake customers that were hacked because Snowflake didn't have two-factor authentication. That happened back in May, and them losing customer data, like AT&T had customer phone numbers and all this stuff. Like, dude, that is scary. That's fucking scary. Like just imagine if you're a company with like hundreds of millions of dollars in sensitive data, and you've got, the certain numbers for your employees and all that, and like internal Slack messages, all this stuff. That is very scary. And it taught me at that moment, oh my God, no matter what cybersecurity company you pick, I think CrowdStrike is going to do well for a variety of reasons, but it doesn't seem like anyone's going to slow down their cybersecurity spend, because I think every organization at some point has that feeling or has an incident, even if it's not super widely advertised, but it's a little internal incident where they realize, holy shit, we need to pay as much as we need to pay for cybersecurity to make sure this doesn't happen. It's not like they want to, overpay by hundreds of millions of dollars or tens of millions of dollars, but it is the number one thing on your IT budget spend that I don't think it is more important than Palantir, I would argue. I think Palantir will be more transformational, but any security product to me seems more important than any other part of your tech stack. Because if your company's not secure, you're screwed. You're screwed. If my Twitter account's not secure, like I don't have access to be able to post on Twitter. So same thing with YouTube. So it just gave me a broader appreciation for cybersecurity. And from a firsthand experience, it seems like going long in the sector makes sense. Now we just have to make sure, we pick the right stocks and even an ETF on cybersecurity. I think it's just something that's not going to go away anytime soon. And I would imagine that there's going to be AI-enabled read-write apps that are able to use phishing attempts via artificial intelligence, that are going to be able to find themselves a way to get through all these different firewalls. And that's going to create more opportunities for cybersecurity threats. By the way, I think I was probably dealing with some random crypto scammer. What happens if you're dealing with like a legit person who's dealing with cybersecurity, like a legit threat, to someone who's really trying to do something bad? Mine was luckily just a crypto scam. If it got a lot worse, obviously, it would have been more intense. So I think investing in cybersecurity is very, very important. It seems like that's not going to go away anytime soon. I hope no one bought the banana coin. I really hope. June put all of her money into banana. I'm sorry, but I hope no one bought that coin. I I really hope. There was one guy who messaged me saying, "Hey, I looked into the coin you bought," and I was just like, "Come on, bro. People can't be like, come on, dude. I know I have a responsibility to not let my account get hacked, but come on, bro. Like, people really can't take that stuff seriously, but apparently people do, and so we just have to make sure that shit does not happen." Ironically, AGI advancements makes cracking through security easier. Yeah, that's why cybersecurity. That's why CrowdStrike, Zscaler, all these guys, they got to get better and better and better. So it's very, very important. I don't know which one is better, CrowdStrike, Palo Alto, or Zscaler. Like, I like CrowdStrike for a variety of reasons. I really like it because it's a founder. I think they have the best product in endpoint security. I think the fact that they, had a Y2K event and only lost 60 million of revenue is like phenomenal. It means that customers trust them so much, even though, and it kind of makes sense now that I went through the experience. I'm like, look, even if my cybersecurity service provider had a little bit of a fuck up, I can't afford to just like switch overnight. Like, I still need those guys in case anything happens. So I get why the majority of customers stayed, and they have an event coming up, I think in 2 days, I think on Wednesday. So we'll get more clarity on full year 2026 guidance. And if that's good for CrowdStrike, then hopefully CrowdStrike continues to be not in a bad situation. But in general, I don't know which one's going to be the winner, but it does seem like cybersecurity is something we can't forget about over the next decade. That and energy, right? It seems like those two are relatively easy bets over the next year. The stocks, we're going to have to see, but even if you just go on the ETFs, it seems like energy is going to matter just given AI demand. And obviously cybersecurity is going to matter also because of AI demand as well. So that's what we have there. Have you heard of WhatsApp scams here in UK? Yeah, dude, I was getting a phone call by this number. And so this, I was on the way to the airport, and this number kept calling me. And this was right when I got hacked, and I was like, oh fuck, I do not want to pick up this number. And then so I Googled the number, and the number apparently is like a Bank of America scammer. It'll call you acting as if they're from Bank of America. It's very important. If you get an unknown call, but you can see the number, I would recommend Googling the number and seeing what it is, and definitely not picking up, because a lot of these people will pretend to be from a local bank or something, and then sucker you into something that's going on. It's getting really sophisticated, bro. And it's one of those things where you just have to be so careful with dealing with a lot of this stuff at the end of the day. My 5-year-old daughter knows what an odometer is. Okay, well, I didn't. You learn something new every day. All right? You learn something new every day. It is what it is. All right? And ChatGPT helped me learn it, so that's why we learned it. All right, let's end off the show with this. Here's the former Fed vice chairman on why there is a case for 50 bips. Let's listen to what they say, and then we will be done for today. I'll have a new Palantir exclusive customer interview dropping in about an hour, and then we will be back for the market open tomorrow, and we'll see how this turns out.
Focus on this week's highly anticipated Fed meeting, where the FOMC is expected to cut interest rates for the first time since 2020. Joining me now to discuss is Alan Blinder, former Fed vice chairman, as well, of course, as a professor at Princeton. Alan, it's great to have you on. I mean, it's a rare level of suspense, I think, especially maybe the first move of a cycle is in the air. Do you really think it's a 50-50 as the market odds would have it, between a quarter point and a half?
Yeah, I'm often not with the market, but in this one I am. It's kind of a coin flip. Now, I don't mean Jay Powell's going to flip a coin. I'm pretty sure he knows. We don't know.
Could you imagine if during the FOMC meeting he literally flipped a coin and decided? I would do that shit. I watched The Dark Knight last night. They flipped a coin when it came out to if the Joker was going to live or die. That would be fun. That would be chaos. That would be exciting for the markets. Jay Powell's not going to do that, but I would do that.
So from our point of view, it's a coin flip.
And do you think, I guess, how much does it matter? And what message does it send in either scenario?
Not a great deal. I think what matters much more than whether it's 25 or 50 is the prose that surrounds either the 25 or the 50. You could have a 25 that sounds aggressive about future cuts, or you could have a 50 that sounds a lot more passive about future cuts. And frankly, it's not so clear which of those two is the more expansionary policy. So I think the pros in this case matter much more than the number of basis points, assuming it's either 25 or 50, and the Fed doesn't have some big surprise in store for us, which I certainly don't think.
Yeah, like 37.5 or nothing.
No,
I mean,
like 75 or zero. Yeah.
Yeah.
We'd be shocked. You'll be shocked.
Sure.
I'll be shocked. That's not going to happen.
Yeah, they seem not to necessarily be looking to shock a market already a little bit off balance in terms of exactly what to respect. Look, I guess the nature of a potential soft landing is that it's in the eye of the beholder, depending on the latest run of data. And so you can make the case that you have to be careful and take out some more insurance against the downturn by going deeper on the first cut, or you assume that you're going to be okay and you have time to move later. Which way would you come down?
Well, that's why it's 50-50. I would come, if it was completely up to me and I was just choosing, I would go 50. I'm more worried, a little bit more worried about the downside risk than the upside risk, but it's a very close.
So you have Dudley and this former Fed vice chair both saying 50. That's interesting because Jay Powell listens to these older guys who used to be on the Fed. I don't know if he's going to agree with them, but he definitely listens to them. And if they're whispering 50 is the way to go, maybe we get a 50.
Close call. And the point is, an important point is, I don't believe everybody on the Federal Open Market Committee thinks what I just said. I think you still have some hawkish sentiment on the committee, and that could drive Jay Powell to think 25 basis points is the way to hold the committee together. Hopefully without dissent at all.
Yeah, because there was a case being built that, 25 with a dissent for 50 or more than one dissent would, implicitly be a bit of a dovish message there. I think one thing that maybe the market has to be refocused on is you wouldn't necessarily be wishing for the circumstances under which the Fed would go big and keep going big. I mean, back in the mid 90s when you were there, that 95 easing cycle was hardly anything, right? It was a couple of cuts, and then it was sort of a hold for a while because the economy did okay.
We did have a 75 in there, the only 75 of Greenspan's entire 18 and a half years. I thought that was pretty aggressive at the time. But in retrospect, if you look at the whole thing, it was a kind of a calm tightening and letting the economy down very nicely. That looks to be what's happening now. And I want to emphasize, as I've done before in other fora, this was a much harder job that Jay Powell and his colleagues had to engineer a soft landing in this environment than Alan Greenspan and his colleagues had in 94, 95. Much harder.
Okay, so that is very interesting to me that both Fed former presidents are campaigning for this 50 basis points cut. Chris is in the chat right here. He did say that August should have been 25, so September 50 is just catching up. I think that's a legitimate argument. And also, we don't have a meeting until November, so if we do get bad data in between, there's not going to be 50 to kind of ease the pain if there was only 25, which means that bad data might actually be bad. We also get retail sales tomorrow. That's going to be very important. What time do we get those retail sales? Let me check. I think it's at 8 a.m. Retail sales we get tomorrow at 8:30. Okay, so 15 minutes before we start the show. Market's expecting 0.2%. Last month we got 1%. Market was expecting 0.4%, so we more than doubled last month. If August is good, Redbook retail sale weekly number says it might be good, then I think retail sales surprises to the upside. Or not even surprises, it does what's in line with some of the weekly Redbook readings we've been seeing. And if it beats expectations, then we might have some more momentum when it comes to the overall health of the consumer. All right, I know I said that was the last thing, but we got a 30-second clip from Dan Ives at some conference he's at, so we gotta play Dan Ives, especially given the outfit he's wearing right here.
Yeah. And this party goes to 4 a.m. Now, I'm not saying at times the music stops, there's glass in the dance floor, people hear the cops at one point thinking they're coming. But in terms of where we are today,
you're making this sound like a scary party.
This is a 9 p.m. party, and it speaks to our view where it's not just about Nvidia, where we believe a year from now you have $3-4 trillion market caps. Nvidia, Apple, Microsoft. And today you only have 3 to 4% Nvidia.
There's Dan being Dan, touting the AI revolution. We're going to see how that plays out. All right, everybody, that's it for me. I'll be back 8:45 a.m. Happy to be back home in the studio. Palantir exclusive customer interview will be dropping at about 6 p.m., so in about 45 minutes. And we'll keep going from there and doing what we got to do. All right. Thank you, everybody. I'll see you guys tomorrow morning, 8:45 a.m. We got retail sales data, and we will keep going from there. Bye, everyone. Have a good one. See you guys tomorrow.